Hi everyone, this is Veni from Department of Management Studies. Here I'm working as assistant professor. Now we are going to discuss about the topic which is called tax burden imposed by US. This topic is come under the subject which is called as financial management, and this paper will be in second semester for our MBA students. Overall, this paper will cover the financial level of the particular companies, particular organization, and this subject is also discussed about capital structure of the company, leverage level, and finally they come under the particular topic which is called as taxation. Here, in this subject, we discussed about how the tax which impact the countries and also how it reflected in import-export procedure. Now I'm going to discuss about the topic which is called as tax burden on India, which is imposed by American policies. And usually we have many tax burden from many countries. I'm taking only the policies which is forced by our domestic market people by American policies. And this presentation is fully investigate about the burden which is given by the American fiscal policies, and also it analyzed the effect of foreign regulation and the tax reforms of Indian business. It also highlighted the economic challenges which is faced by the domestic market people. So, moreover, before going entering into the subject, we all know about what is called domestic market. So, domestic market is nothing but all the things which is called production, distribution, and consumption of goods and service that all happen inside India, especially in geographical areas. And this domestic market is also held middle level people, the people who all work under the category of middle level income peoples or not. So in our government, they encourage many schemes and many schemes will be provided, which is support women entrepreneur. The people can separately work together and they can separately run their own business. So many monetary schemes will be awarded by our government also. Both central government and state government encourage the people. So here, how the domestic market is affected by the policies which is imported by American, which is in the form of tax. And also in this slide, we understand the implication of overall international trade and finance will be how it could be in a manner. And second one, before we going into the topic, we have to know about what is called tax burden. So tax burden is nothing but it will be affected by the business people. They pay more amount to the government. So in 2017, our India will introduce a GST. There is a one question will be there: one nation, one market, and one tax. So it is replaced central, state, and indirect taxes. It is also excluded VAT service tax also. So from that 2017 onwards, monthly GST will be there. It is a common tax will be imposed by the government. We people are pay whatever we buy the product. It is come under the category of GST. And this is an overview of tax burden. So generally, tax burden is refers to financial stability and also financial burden which is faced by the individual as well as the business people due to the taxation which is over. So every business have to pay some tax as per the norms which is come under the category of their own business services. But it quite difficult whether it is going into the international market, especially in import export procedures and all the other countries, other countries including UK related, English related countries also having some tax, especially by last 2 years at our domestic market level and also our market, Indian market peoples who lead in American business markets, they also face some taxation problem. It also reflected in our Indian economy also. And overall, the global context of the tax will be influenced by international economic policies. Particularly, they focused on the major economics. So, economics is a basic things of every nation. It has also affected the economic level of our nation. and also the economic landscape, which is having the unique challenges. They have to balance both tax policies and also the growing level of the international norms. So India will adopt each every country's policies, their monetary policies, their fiscal policies also. Moreover, by implementing some of the tax burden to our market players, key market players in the American market, it feels quite difficult to handle to run their business. Especially that one of the case study I have read by last 2 months. There will be one restaurant from South Indian zone. One restaurant will be running in US, particular with particular main city in US. They have run around 10 to 15 years in a particular city, but by last 1 year they have faced many problems. They have not even to run their regular day-to-day business also because of the over regulations. Norms will be imposed by that particular government. In US and all, there will be each and every city only that here we mentioned about counselor or some CM and also, but they have the people which have that some major person to have a control over the particular city. They have get approval from that particular person. So they focus, most of the people come outside and they implement their business, they invest their business in that city. They imposed particularly that particular business only, imposed implement many norms and taxation and time limit also they fixed. So that particular South Indian restaurant owner, they discussed they are facing many problems. Even they are not able to run the business. They probably it is continuous means they have closed the business and they come back to India. So this is also affected to our Indian investment also. So many of the people, even we encourage our foreign direct investment here. So foreign direct investment, we encourage what is the main purpose means how the people can invest it, and here there will be the economic growth will be there. But now that particular trend will be totally changed. The nation will be focused on only the growth of the particular nation. Next, the impact of United States tax policies to our country. So in Indian economics, we have to obey the tax regulation which is operating. The person who are and all come under the category of American market who play the vital role in American market, they have to obey the tax and regulation. And also why the difficulties will be faced by that particular persons means they have to face many operational costs which will be quite increased, and also the pricing regulation of the taxation. So the rules on transfer pricing, which is required Indian firms to accurately report. So intercompany transaction, and often the leading dispute and additional tax liabilities. That is, the person they have any intercompany transaction which is included in transfer price regulation, they have to transfer the level which is fixed by the US government. And some of the credits was also having the United States also allows foreign tax credit, which is quite benefit to our Indian companies, but also the cost of this credit transactions for tax credit is quite expensive. So wherever the offer will be given by the US government to our company, to our Indian markets or Indian lead companies, if we get only 10% advantage means 90% disadvantage. It is in a form of expensive in casting, getting approval from the particular area, or getting approved for the particular business. So there will be lot of rules and regulation will be imposed. That particular rules and the regulation will be different from each and every country. And we go for challenges for India's business. So moreover, in Indian people have their business in worldwide we have, but especially most of the people going to US, United States for the purpose of working, which is in the field of IT, medicine, whatever it is. Only 20 to 30% of people they can running the business, and maybe people can invest their investment in foreign related market, like many market which is included in KFC, which is focusing or based on United States, they also invested. So those are the people having the following changes, which is impact from the tax imposed by the particular government. First one, the main thing is increased cost. So Indian government and Indian companies, which is come under to run the business in the American market, they have benefit for credit system, but also already we discussed in the last slide, we also foreign tax credit system which is quite beneficial to our Indian companies, but it's too difficult to maintain. It is quite expensive in nature, and market access issues is also there. So Indian companies, many of the companies hesitate to enter the US market because of high tax burden, and also it is difficult to curtail, which is growth level. It is too difficult, and also the companies is not able to expand, and also the tax investment decision also affected by the tax environment, which is influenced by Indian business who's invested and with this having their favorable level. So investment decision is also one of the major factor will be challenged by the Indian business people, as we said earlier. So investment decision also played. Only the people can go and run the business in the uh, United States, or the people who tie up with the company, which is based on years. Not only those people face the challenges, but also the people who invested in investment also change the challenges which is given by the United States government. And also India's response strategies, which is reflected, and how the people can communicate their levels and the strategies with their companies. So, tax reforms, the picture itself, we explain how the tax will be distributed and how they come return back to us. So, India has been reforming tax structure to align the global standards. So, our standard is quite good. How the people can circulate, how they maintain the surplus of money in every time. So we are in a mixed economy. We know how to surplusly maintain their money. So it is the global level standard. The tax structure is quite comfortable in India. And also bilateral agreement, which is called as the agreement between two parties. It are accepted by both whatever the tax rules and regulation, government norms, whatever it is. And is also once we have a bilateral agreement with the United States related based companies, it's quite avoid to double entry of taxation. That is I said US help mitigate double taxation. So we avoid double taxation while we have a bilateral agreement on US based any companies. And also it is promoting transparency by encouraging transparency in tax reporting help to navigate US tax laws. So transparency from both sides, we can able to identify why it is required and what is the taxation level and the company will be faced. In the major part of this, how the people, even though the challenges will be more and also competition will be more, but the people still run the business means with the help of the international organization rule. So these are the three important international organization will support the business people to lead in a competitive market, especially in United States related companies or other companies which is come under the global market. So the first one is the Organization for Economic Cooperation and Development. The main purpose of it is provide the guidelines of global tax policies, which is also including those affecting India. Like what are this organization that is we called as OECD. This organization will help how to promoting economic growth, financial stability, and international standard. And the second one is World Bank support. The World Bank offer many support, I mean, especially here to strengthen the tax system, and this is more resilient to international process making. So, World Bank, the main purpose of World Bank is to stabilize each and every country's economy. So, they have to support, whether especially developing countries like India and some other countries, while they compete in a market in a global level, even the particular companies coming from developing countries, they're facing problem on developed countries, how they tackle their marketing condition, even they support the government to developing their economic system. And finally, collaboration with United States. Some of the strengthening tie-up between United States, like the tie-up between India and US related foreign direct investment, those related concept. It is mutually beneficial for tax policies and also especially that support the economic growth. And also in foreign direct investment, there will be federal income tax will be there. So federal income tax is nothing but the tax is based on individual living and the status, and also it is focusing the expenses ranging from the country's infrastructures, economic level, and also United Nations they fixed the territorial taxation which is worldwide. How the people can incorporate taxation in their US sourced income. Whether people can get income through with the help of US, they are also forced to pay some taxation, which is fixed by the percentage by the particular government. And let's see the future outlook for Indian business in this global competitive market. So Indian business stay informed and used to develop, and also anytime they have to adopt the any changes would be forced by global level market. And the technology is also helpful to the people to optimize the level, to optimize the flow of cash for their transactions, and is also it's sustainably focusing and providing the tax incentive for internationally. The people having the sustainable focus to develop their business, so they have to understand the tax policies and tax relaxations which is given by the particular country which is they tie up or they run the business. So it will help the person or the company to lead the market. And the implication of India's tax policy, I chosen three category, which is called as balancing the policies and also the approaches which is come under collaborative and is adoptability. So the major things is how the people can adopt the changing, whether it could be in a form of tax or it could be in a form of environment or a culture, how they adopt the environment and run the business successfully. There are many of the companies, they adopt the culture and they run the business till now. And the balancing, which is also help the Indian policymaker, must balance the need for tax revenue and also fostering the environment business to growth external pressure. Even though many companies having facing many problems, but they have run the business in a successful manner with the help of the people, both inside and external organization. And also the financial setup and capital structure will be framed by their financial expert. Even though the business having some deficiency, how they tackle and handle the situation, how they structure the financial structure will be stabilized. If it is good, if the business going good means how they handle that situation. So balancing financial structure and capital structure in the market is in the hand of the financial support system of the particular company. And also it is a collaborative approach between India and US can also lead the taxation. Sometimes if the company based some US based company and India based company tie up there for like foreign direct investment which is collaborated by last 2 years back itself, our state government collaborate many FTA investment in, especially in South Zone. So those are the companies have some tax relaxation, which is because the people can tie up with your state government. And also, as we already said, ability to adopt changing the regulations. So Indian companies is also interconnected with the global economy. How the people can change, how they can adopt the tax policy and other things which is imposed by the market, global level market. And finally, I concluded three major points. One will be increased operational cost once due to the taxation imposed by that particular US related companies is including, as we said, federal tax also. So many tax they have to pay sales, payroll tax directly, increasing financial burden. It is also give some it helps the US government to develop their own economy. Even though there will be a number of Indians outside India, they send dollars, thousand, I mean, many dollars, which is from that particular country to India. So we have some favorable balance maintained by the in economy. but sometimes it is faced increased operational cost. It's quite expensive for the business leading people, and also complex challenges utilizing tax credit. So some of the challenges is also there to operating their level, and also the credit level of the particular tax is not much easy to adopt and follow. It is quite difficult to the companies to follow. And last is the indirect impact on domestic market. As already we know, starting itself, we discussed about the importance of domestic market. So the people from the domestic market is quite feel expensive and quite difficult to understand the global strategies imposed by the particular government, and also they have to focusing their strengthening presence of their own strategy and investing and analyzing the path to invest it, and moreover it also impact the domestic level people. They won't able to run the business due to this burden. And as finally I concluded, this US tax burden is quite affected the middle level range people only. How the people can, middle level people, even the people can able to run the business, but sometimes this will affect the peoples also. So we reconcile this taxation and discussed how the people can tackle this level, tackle this procedure, and how they lead the business. We'll continue in another slide how successfully the people can overcome these burden and run the business. Thank you. If you have any queries or feedbacks, kindly send your queries to this email ID, venij@jgct.ac.in. Thank you.